Chart watchers, welcome to this Wednesday, July 10th, 2019 Chartwise Women Show with your hosts, Erin and Mary Ellen McGonigal. We are so glad that you are joining us today. We have lots to talk to you about. And so let's go ahead and look at that agenda right away. But Mary Ellen, how you doing today?
Oh, I'm doing wonderful. It's been great. You and I have been up here in Seattle, enjoying the greater beauty of all things green up here.
I know, right? It's
lovely.
Lots of rain. We both are from Southern California, so experiencing the weather here is always a lot more interesting, I guess.
Yeah, I would say bring layering if you intend on traveling here, but it is beautiful.
Absolutely. Well, let's go ahead. We'll go dive right into our agenda for the day. We're going to start off like we usually do with our wisdom of the week. And then we're going to be the topic we're going to really be discussing today is risk aversion. And then from there, we're going to give you an idea of what tools are in the toolbox today. And then we'll also have what's cooking from data farm to table. So we'll be looking at what's happening right now seasonally. It looks good, and we'll discuss that. And then, of course, we like to finish the show with, yeah, that happened. So let's go ahead. I want to go and start with just a quick look at the markets because something very big happened today, right, Mary Ellen?
Yeah, it was rather momentous given all the anxiety going into today's action with the Federal Reserve Chair Powell addressing Congress. And leading into today, there was a lot of trepidation among the markets, and they were rather flat. But things perked up a bit today.
Absolutely. And, we've hit that milestone. I always talk about mental milestones on a lot of charts where, people are very aware of certain levels. And today, that big milestone, let me pull up a S&P chart for you right here. The big milestone, of course, was the fact we actually hit over 3,000. Now, we haven't closed yet today. So we'll have to figure out whether that's going to actually hold up. But that's one of those mental numbers that people are paying attention to. Back in the day, it was gold 1,000.
And it was S&P 2,000 for quite some time, the climb, right. And we did make it above that. So yeah, big number.
Absolutely. So we did want to point that out and let you know what's going on with the market. As far as what we're looking at, like I said, you have that little breakout there, which is nice to see. And with, like we said, with the climate, with the Fed and what the sentiment seems to be out there, I suspect we're going to see higher prices. Are you feeling the same way?
Yeah, a lot of bullish action taking place. If you'd like, I can go ahead and show a couple of
yes, go for it.
Charts. What I am finding particularly compelling about this market is the fact that we are finally seeing participation in a considerable way among these FANG stocks. What we're looking at here is a weekly chart of Facebook. Let me just go ahead and pull it up for you here so you can see what I am seeing. So here we are with Facebook, and it has had a significant advance, certainly year to date. What I like to see, the fact it is up 2.5% on the week. Ideally, if we can get up above this 210 level, that would be very constructive. And I'm going to take you to another, and what I'm sharing with you, of course, are these FANG stocks. These are the big heavyweights in the markets, and when we're looking at the S&P 500, these are going to be the drivers. These are going to be the heavyweights among that index. Take a look at Amazon. It's up almost 4% for the day, very close to breaking out of this super long-term base, very bullish. For those of you not familiar with the concept of base, is when a stock hits a new near-time high, falters, and as it approaches and eventually breaks above that prior high, that's viewed as breaking out of a base. It's a very, very bullish view, if you will, just a way to use these charts. And what I really want to point out to you is the longer term that basing action is, I'm taking you back to mid-17, the longer your advance out of that base. Take a look at this. This is about a 14-month advance out of this base. So when we talk about it, we're talking now about a base that is 11 months long. Ideally, we can see potentially a very nice big advance out of there. So one other FANG stock that I'd like to share with you is Netflix. This is another name that really had been sitting on the sidelines for a bit. I will tell you, it is not particularly dynamic on the weekly. We can pull up a daily. This company is due to report their earnings in about 10 days. But what I like here is this bullish action today. The stock pulled back and is poised to close in the upper portion of its trading range for the day. That's quite bullish. But so I've shared 3 of the 5 FANG stocks, and they appear to be coming to life, if you will. Again, very bullish sign for the broader markets.
Yeah, I have to tell you a little bit of a story. My nephew, weeks ago, had asked me to look at. He's 8 years old, and he actually sent me a text and said, "Oh, can you look at Hershey?" Like, he wanted to know about Hershey. I'm like, he's never shown any interest in any of this. Well, I did annotate a little chart and send it, but then I decided to quiz him and ask him if he knew what the FANG stocks were. What would that stand for? And so he had a little trouble, and Mom helped him a little bit, but of course it's Facebook, and then you have your 2 A's, Apple and Amazon. And Netflix, and of course G would be Google, or I guess they call it Alphabet now, but I don't think they want to add another A. So.
Yeah, and Google's an interesting chart if you want me to take a moment on that.
Absolutely.
Because Google really has been sitting out this recent uptrend, this recent rally that we have seen in the broader markets that's taking the S&P to higher highs. But take a look at this decimation. This had everything to do with antitrust issues. And all of these large FANG stocks were hit with that same antitrust, but they were able to recover. Google is suffering. They're having a tougher time reversing this downtrend. But I will say today's action in Google is, from my work, really quite bullish. It's able to break up above these simple moving averages. So we could be very well on our way to reversing this downtrend. I would keep an eye on it. Again, super good for the markets when we see these heavyweights starting to participate and get money flows.
Absolutely. Let's move on into our wisdom of the week. I think it's a good time to do that. And we've sort of come up with our little short quotes of what we want to talk about. And mine is, don't hold on to a loser. Now, that, of course, usually means something about men as well. However, when you're talking about it in your portfolio, one of the things, and we talk about that women tend to be more risk averse, but that's not always true. We have a great story to tell you about last night, but I wanted to say, you don't hold on to a loser. That means if you have all of these positions in your portfolio, what people tend to do is they see the one that is losing a lot of money. They have all their winners, but what do they want to do? They want to go and sell the winner, because they keep thinking, well, hope, playing on hope. Well, I don't have that loss until I actually sell it. Well, guess what? If you don't and you stay with them, that leads right into your wisdom.
Absolutely. Yes. So in line with that, I would say that it's okay to be wrong. Absolutely. To be successful in trading, statistics cite that you can be correct only 40% of the time and be really quite successful. But that is going to be all about realizing your losses. So my wisdom of the day is, it's okay to be wrong, but it is never okay to stay wrong. So it's in line with what you were saying, Erin, in the sense that if you have a stock that is losing, don't keep hoping that it is going to be recovering, because as it gets lower and lower, your ability to recoup those losses, it gets astronomical. So in fact, later we will be sharing with you a very, very simple yet powerful tool that is going to help you know when the uptrend is over, when it is time to exit, because that is one thing that both Erin and I feel, and it is proven, that being able to cut your losses is going to make all the difference in the world to your success.
Absolutely. And so talking about that risk aversion, and, holding on to losers, or, picking those winners and having no problem putting the money out there. So we actually were sitting, I guess I can say, at the bar, drinking club soda. And there was this young man there, of course. He was in his late 20s, I would guess. And he found out we were, did the stock market thing. And he was so excited to show us all these great trades he'd been making with his cash account. And he says, yeah, I figured that one might not, I might lose a lot on it, but I knew the gains would be great. And so I had no problem throwing that out there. And I sat back and I looked at him. I said, well, what about your other accounts? Like, I know you're talking about using your cash, but what about your retirement and everything? Kind of what's your, philosophy? He's like, well, buy and hold. I don't really do, take a lot of risk there. And we're looking at him and we're thinking, you are young. You should be able to go out there and, take on a little bit more risk. You have time. But the key is he had no problem taking some serious risk that I have to say I wouldn't be taking in some cases. But when
With
it came
the cash, yeah.
Exactly.
And interestingly, that bulk that is should be growing, it sounded as if it was in very market watching S&P type of ETFs, that and that's realistically where you need to be putting your risk, a calculated risk, I would argue. We're not saying go out and buy pork bellies, not at all. It's more having a system in place that we are going to be revealing to you over the upcoming weeks. Utilize this system so that you can have a little bit more in the way of risk, but more with an eye toward higher returns. And it is going to be all about having a very, very simple system. And again, as the weeks evolve, we are going to share this very simple system with you, and we will utilize this system going forward, all with an eye toward helping you outperform the broader markets and introduce that risk so that you can grow those funds.
Absolutely. And, one of the things we have touched on as well, we just have a minute or two before we move on. But, we have talked about how women in particular are worried about outliving their retirements. And you know what, if you've got your money manager and I have a friend and she's, just about ready to turn, 60, and her sister-in-law happens to be who does the investing for her, has put her into all of these really low risk, retirement type stuff because of her age. But it's, we live a lot longer,
Yep.
Not just women, but I mean, people in general. And to kind of have those accounts stagnate like that is just a waste of, what she could be getting. But it can be just as simple too as, it's time to get completely out. It's time to stay in. We're going to try and make it as accessible as possible for you. So we will be back shortly. We're going to talk about our next item. We're going to talk about one of the tools in our toolbox that I think will help you with your risk. All right, we are back with our toolbox today. So what we've decided is that as we start to reveal these system that we are using, that we'll take just one piece of the pie, one piece of the puzzle, and explain that and get really close up on just one of the tools. And today, the one tool we're going to use, and I'm naming it. I'm going to give you my screen here just in a moment. We're calling it the pink line. It's actually a chandelier exit, which I like the name chandelier too, sparkly, right? So anyway, we're going to look at the pink line as chandelier exit. So what this does is it tells you when it might be time to get out. And that is when price comes down and crosses below it. So if it's below the pink line, you don't want to own it. And so that is that way that, you can get in, and we're going to talk about that more in the coming weeks. But when you get in, one way to kind of make that angst and concern go away a little bit is to have a guide, a mechanical guide. I'm all about the tech and the mechanical systems. That's what I do with Decision Point. And so when you have a mechanical model or indicator to fall back on, it takes a lot of that.
Yeah. I think quite simply what we are presenting to you here with this pink line is an exit strategy, so that when your stock drops below this pink line, historically, the odds are it is time to exit that stock. Now we're looking at a daily price chart. So inevitably, this approach is going to be for shorter term investors using a daily price chart. We can, of course, drill out at some point and look at longer term charts, and you'll see the continued effectiveness of this pink line. It will act a little bit differently because on the weekly chart, you'll be seeing that the pink line is a bit further away. And that is a good thing because weekly charts are used for longer term investors. And if it breaks below the weekly, for those of you that tend to hold on to your stocks for months or a year at a time, that drop below the pink is going to be super significant. But at the end of the day, this is a very simple tool, very easy to utilize, something that you can check on your stocks maybe at the end of the day, or if you're more active intraday. But again, this stock can be used for mostly to set trailing stop losses. But again, it's a super simple exit strategy that we want to share with you so that you can get into these stocks and not feel so nervous or anxious that you might not get out in time.
Right.
So that's our
chandelier. I think, Charles Kirkpatrick, he's written some amazing books if you're ever interested in following more of this. But his thing that he says is that it's really easy to get in and buy. It's just so easy, right? It's not perfectly easy, but it's a lot easier emotionally and everything. There's that excitement going in, and this is great. And then you're watching it, and of course, it's going up and down. It's a lot. And then you start to question, is it a good time to get out? Is it not a good time? So what he has said is it's really easy to buy. The hard part is knowing when to sell.
Exactly.
And that still comes up on Market Watchers Live.
Right.
It comes up, I know, when you talk to your viewers and readers.
Yep. I've had a number of clients, and there's always a need and a desire for those that are more knowledgeable to share that exit strategy, because again, it's not only going to help you preserve your profits, it's also going to help your sanity while you are involved in that stock, because inevitably that stock is going to bounce around. But now you have a simple yet very solid way to gauge exit strategies.
All right. And here's a chart of a company we've talked about recently, not as far as stocks go, but e.l.f. Cosmetics. And so I just figured I'd pull this one up just to give you a little bit more of a look at it as well. So it's not a perfect thing, right? Sometimes you do get that what we call stopped out. You end up getting out a little bit sooner than you really would like to. And in this case, maybe that's how you would have felt, because then it's immediately starting to go up. We'll start pointing out these other tools, though, that are going to help you with realizing, the significance maybe of a drop and what that might mean. So, for example,
but I would argue that that would have been a good exit, because while it did go up briefly for about 8 days, it dropped again, and the frustration level would have been excessive.
Yes, and as you said too, when it falls, it's not a matter of just going back up to the price it was to recoup your losses. You have to gain more. So what would have happened here?
Right.
Exactly.
So getting out when that is signaled over time, statistically, it will serve you quite well.
Right. And like I said, that would have happened, but we had other clues here that might have told us that you probably want to get out, or you want to get back in, just based on where prices, for example, you might have held here because it didn't fall below this average that we're going to talk about later. But, there are different things that could be done to work toward that.
Yeah. So as we move forward, we will share our secret sauce for the entry points, and then other very critical components. But for our first, we felt it was very necessary and critical to help with strategizing for that exit plan.
Exactly. So now let's go ahead and what's cooking out there, Mary Ellen? Data farm to table. What's hot?
So in this segment, this is where Erin and I go out to the fields and we look at what's really looking quite attractive, and where do we want to harvest. And so we've done the work. We've analyzed the data and looked at the seasonality. And so what I'm going to be sharing with you initially is a chart of an area that really is continuing to outperform the broader markets. And from here, we'll go ahead and drill down. We're looking at a daily view of its XLRE, and this is the Real Estate Select Sector Fund for the S&P. And so take a look at this general uptrend. We're looking at a daily price chart. This period in late June, there was a drop off of these higher yielding stocks. They did find support here, but take a look at this activity over the last week and a half. They've come charging, not only regaining these losses, but then some. So this is an area that we are finding really quite vibrant. And I will tell you, drilling down, we're going to share with you some of the better performing stocks, and they are performing better for numerous reasons. Number one, they are super strong. They have strong management, strong fundamentals. But with these stocks, when you're looking at what are called REIT stocks, they are higher yielding. And we're continuing to be in an environment, there's quite a bit of uncertainty around interest rates. Of course, the Fed Chair Powell is speaking. We also still have trade war concerns that are out there. So I would argue that these real estate REIT higher yielding stocks, the first stock I'm going to share with you does yield 4.9%, and that's in comparison to the 10-year, which has been struggling at that 2%, the 10-year Treasury bond. So as an alternative on the yield side, so here's a daily price chart, WP Carey. This company is a diversified REIT, real estate investment trust company. They go out, they acquire buildings, lease them out to tenants. 90% of their revenue, they are mandated to share with shareholders, hence that nice high yield. And the stock, what I like to see is stocks that are performing well previously, prior to that pullback. This is April into the end of June. And this is the reasons are, this is again, a very sound company, very strong growth prospects, well liked by the street. It drops, but now it has regained. The stock does still look quite constructive. And let me go ahead and share another stock.
Okay, which one did you want me to pull up?
Oh my goodness, of course. MPW.
All right, here we go.
And thanks, Erin, because we do, of course, want to keep consistent with our view so that we have that nice chandelier exit displayed, as well as other very simple metrics. So Medical Properties Trust, MPW, is the ticker symbol. This is a stock that yields 5.4%, but that, of course, is not going to be your only metric to pay attention to. Other outside factors are that this particular company provides care, long-term care for patients, and this is and continues to be a very growing and vibrant area, because as we have an aging population, there is a need for these wonderful developments, and we can see that the stock is approaching and has broken out to a new high in price, and that is very, very bullish, very constructive, and the stock is also in an uptrend. So this is another one. And then one last name that I can share with you. The ticker is IIPR. And this is Innovative Properties. This company is involved in legalized or medical marijuana facilities. And you can see it's really taken off in that June period in particular. The growth prospects here are tremendous. Analysts are calling for 125%. And instead of earnings, these REIT stocks use what is called funds from operations. And again, that's all about these buildings they're leasing. The demand is super high. Next year, equally strong, 47% FFO growth. But bigger point here is this stock, we're on a daily price chart. It is poised to hit a new high in price if it's able to break out, very, very bullish. So those are several names within that seasonally strong area that we've harvested for you today.
Yes.
And Erin, I think you have a couple of names.
Yeah, I was just looking at the technicals using my indicators, and I pulled up a few. Avalon Bay is one, and you could see that we had a really nice breakout for Avalon Bay. I watched these other indicators. You can see the momentum is moving to the upside. We have a lot of interest here as far as those volume bars go, lots of black bars. Got the pullback toward that chandelier, and then it bounced right back up with that breakout. So I thought that looked good. And then the other was just NSA. And then we will finish with our, yeah, that happened. You can see that we're coming out into this nice rally. The momentum is now shifted toward the upside. And you can see the interest that came in here with that giant volume bar at the bottom of this rally. So another one I think that looks pretty good to put on the table. But yeah, that happened. Can you share your screen?
I will share it. And each week we're sharing with you some headline news that seems, it's very interesting. And it's actually this week. It is a repeat as far as the company. Now, last week we shared with you that Taco Bell had a pop-up hotel and it sold out in 2 minutes. And so on the heels of that, they were in the news again this week. And I'll be darned if Taco Bell is running out of tortillas.
Oh, no.
Unbelievable.
And I know Twitter has just done, people are going crazy on that, but we thought that was one of the interesting one of, yeah.
They're calling it tortilla apocalypse. And it's bad news. So we can see Bank of America actually downgraded the stock. They are expecting a real impact from this 1% as far as year-over-year sales. We're looking at Yum Brands. They own Taco Bell. If you want to take a look at that, and you can see it's holding in quite well.
Yeah, absolutely. Well, another week has finished, and it has just been a pleasure. And honestly, I think this week has been extra special because we're sitting in the same room.
That's right.
And it makes it a little bit more fun. And of course, we always love to have a good conversation like we have been this whole week. But I want to thank all of you for coming in today and sharing with us on the show. Please remember to complete that survey as you exit, because we want to get your feedback and, of course, hear more about what you might want us to cover. So we do air at, we changed our time, but we're at 3 p.m. now Eastern on Wednesdays. Be sure and join us next week.
Take care, everyone.